Hello and welcome to this session in which we would look at an overview of fund financial statements. We can have three types of funds financial statements: governmental funds, proprietary funds, and fiduciary funds. Now, in prior session, we looked at each fund separately and how is the fund created. We looked at journal entries. We looked at activities for the governmental, such as a general fund, special revenue fund, capital project, debt service funds, and permanent, as well as the proprietary funds, as well as the fiduciary funds. In this session, we're going to be looking at the end product. The end product is obviously the financial statements, the financial reports. So in this session, you should be very familiar in everything I am mentioning here. Why? Because you already went over it, but it's an overview. Also, these financial statements will be found in the annual comprehensive financial report. So if you're trying to understand the annual comprehensive financial report, part of it is knowing how to read the fund financial statements. Specifically, I'm going to be using the city of Philadelphia to show you the various fund financial statements. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Starting with the governmental funds, notice here the governmental funds, it's the balance sheet, the city of Philadelphia. What do you need to know about this governmental fund, part of the fund financial statements? Well, here's what I want you to see. I want you to see the various funds that are reported. Of course, the general fund, always have a general fund. The city of Philadelphia will have health choices, behavior health fund, the grants revenue fund, and other governmental fund, and the total fund. This is the balance sheet. Which accounting method do we use to prepare this report? We use the modified accrual. The modified accrual, not the full accrual, the modified accrual. What does that mean? What do we need to know about the modified accrual? No long-term asset, no non-current asset. If you look at the asset, we don't have capital asset. We don't have property, plant, and equipment. If you notice, we have cash, equity in treasurer's account, investment, due from, amount held by agent, taxes receivable, accounts receivable, lease receivable, so on and so forth. We don't have long-term assets. If we look at the liabilities, we don't have long-term liabilities. We don't have the bonds reported here. We don't have the long-term loans reported here. Voucher payable, accounts payable, payroll payable, due to, funds in escrow, due to, unearned revenue, overpayment of taxes. That's it. Then we report the fund balances. And remember, we talked about this because we are looking at a governmental fund that uses modified accrual. The term, the difference between assets and liabilities, we call them fund balances. And under fund balances, we have the 5 categories: non-spendable, restricted, committed, assigned, and unassigned. Well, if you don't know any of these, there's one whole session about just the fund balances, the explanation for this. This is just an overview what things would look like. We would also have deferred inflow of resources, and we'll have a deferred outflow of resources. The deferred inflow will be part of your assets, and we have the deferred inflows, which will be part of the liabilities. Remember here, we don't use the term net position. Net position is used for financial statements that use full accrual. We use fund balances for statements that use the modified accrual. So this is the balance sheet for the governmental fund. Let's take a look at the equivalent income statement, which is called the statements of revenues, expenditure, and changes in fund balance. As I said, it's in quote income statement, but the proper term is statement of revenues, expenditure, and changes in fund balances. If we're using the word fund balances, it means we do what? We use modified accrual. Yes, we use the term revenue minus expenditure, not expenses, not expenses. We use the term expenditure. Also here we have other finances sources. For example, we could have debt as a financing sources, or uses. For example, we could be paying off debt. We could have leases, transfer in and transferred out as well, goes into the statement. So this is basically an overview of what's equivalent to income statement. But again, for the governmental fund, we call it what? Statement of revenues, expenditure, and changes in fund balance. Let's switch gears now and move to the proprietary fund, the business-like fund. Well, the business-like funds use full accrual. Notice the governmental funds use modified accrual. This use full accrual, or the accounting that you are familiar with when it comes to for-profit businesses. In the city of Philadelphia, they have the water and sewer fund and the aviation fund that are considered what type of fund? Major fund. And you need to know, why do we report those as major fund? There is the 10 and the 5% rule. We cover this also in a separate recording. Then all other non-major fund are bunched together. This is their balance sheet. We call it the statement of fund net position. Why do we use the word net position? Because we use the full accrual accounting. What else do we need to know about the full accrual accounting? Under the full accrual accounting, we have non-current asset, capital asset, accumulated depreciation. It's normal accounting, the accounting that we know. Full accrual, long-term assets. Also here, what you could have also you could have also a separate column for the internal service funds as well. That's fine as well. On the liability side, again, we're still working within the proprietary funds. It's also obviously for a full accrual. It's the same financial statement. But what I want you to notice is we have current liabilities and we have non-current liabilities, like bonds payable, non-current liabilities. We report both current and non-current. Again, the internal service funds liabilities could be listed here as a separate column as well. Also, what you need to know is we report the net position, fund net position, and we have three types of fund net position. We could have restricted net position, unrestricted, and net asset invested in capital asset. Net investment in capital asset 1, restricted is 2, and unrestricted is 3. We have three positions. Again, I have one separate recording about the net position. Again, this is just an overview what things would look like, And this is the same thing as government-wide financial statements. In government-wide financial statements, which we'll see later, we use the full accrual. And since we use the full accrual, they have net position could be presented under three categories. We're going to move from the equivalent of balance sheet to the equivalent of the income statement for proprietary funds. This is the equivalent of the income statement. Statement of revenues, expenses, they use word expenses, and changes in net position. This is full accrual. Revenues, we all know what revenues are. They report operating revenue. We have a line that's called operating revenues. We have total operating revenues, total operating expenses. The difference between them is operating revenues. We also have a section that's called non-operating revenues and expenses, federal, state, and local taxes, investments, debt service, other revenues. Think about operating and non-operating revenues and expenses for normal businesses. Then they have income before contribution and transfer. Then they have what's called transfer in and transfer out. They have capital contribution. Then they have the change in net position. Basically, the difference simply put between their revenues and expenses. But notice what I want you to notice on this financial statement. You will find the word depreciation expense. So depreciation expense is part of these expenses. Why? Because this financial statement uses full accrual. Full accrual depreciate. We have long-term assets. And as a result, we could have depreciation expense, which is listed right here, depreciation expense. Also, we could have interest income and interest expense. Interest income and interest expense are also listed here because we do carry the debt and it's reported as interest expense. We have transferred in and transferred out. Then once we have the change in net position, if it's positive, we'll take the change to net position, add it to the beginning to come up with the ending net position. And the ending net position, obviously, will be reported where? Ending net position will be reported. Ending net position is this for the whole fund. So we have the total change, then we have the beginning, then we made an adjustment. They have a beginning, then we made an adjustment, and the ending net position is $2,170,773. So this is the net position for what? For the enterprise fund. And notice here on the balance sheet, this is the total net position, will be the total net position. This is the balance sheet for the enterprise fund as well, $2,170,773. I just want to make sure you can see both. You can see where it eventually ends up. It ends up on the balance sheet, the statement of net position for the government. The third financial statement for proprietary fund, which is unusual, is called the statement of cash flows. Yes, we do prepare statement of cash flows for what? For the proprietary funds, the business-like funds. Remember, they're business-like. The business-like, they have cash flow. So why not have cash flow? What do we need to know about the statement of cash flow? By the way, how to prepare the statement of cash flow and going over into specific details plus examples, I have this in a separate recording. Once again, this is an overview of the cash flow, but if you want more details, go to that section. First, we use the direct method, not the indirect method. And we reconcile to operating income, not net income. So we reconcile to operating income, not net income for profit. There are 4 sections. Cash flow from operation, that's one. Cash flow from non-capital financing activities. Cash flow from capital and related financing, and cash flow from investing. So we have 4 different sections versus the for-profit statement of cash flows where we only have 3, which are operating, investing, and financing. And in the for-profit, you'll have operating, investing, then financing. Okay, here notice it's operating, then we have capital financing and non-capital financing, then we have investment or investing, investment or investing. The proper word is the investing section, Now, if you want to just get you want to get an idea what goes under each, for example, receipts from customers, payment to suppliers goes under operating. Capital financing, operating grant received, basically capital. Capital means money. How you are being financed? Operating grants. Somebody's given you grants to operate. Operating subsidies and transfer from other funds. That's operating. Then we have non-capital financing. Non-capital financing is when you issue debt, when you receive capital grants and contribution, when you have interest paid on that instrument because the debt is that's an outflow. So those are the non-capital financing. Then we have the investing section. Proceeds from sale of maturities of investments, interest, dividend, and losses. Those are the 4th category. Once again, I have a separate recording on how to prepare one from scratch. Notice interest income. Interest income is an investing, not operating. And I mentioned this in the other session, where interest income is an investing activity. Interest income is under investing. For GAAP, for for-profit businesses, it's under operating. So you have to know those subtle differences. We also have interest expenses. Same concept. It's not operating. Interest expense is, we could have a capital. For interest expense, we could have 2 types, capital related or financing and non-capital related and financing. So interest expense could be in 2 different places or not operating. It's not operating because this is not GAAP. This is not GAAP. Therefore, it's not operating. Make sure you're aware of this. And capital asset purchase, when you buy capital asset, it's a financing activity. Once again, make sure if you're not comfortable with this, to be comfortable with it. This is just an overview. Moving to the 3rd type of governmental funds, which is the fiduciary net position. Again, from the word of it, which accounting basis do they use? Is it modified accrual or full accrual? And I hope you know, because we're using the term net position, it's full accrual or just accrual. Also, what you need to know about these funds they are not consolidated with the government-wide financial statement. They use full accrual. They are listed separately. From the net position, you would know that. Look, they have cash, they have liabilities. They could have long-term and short-term if they do, but they don't. But if they do, that's not a problem. And the difference between them is net position. Usually it's restricted. That's why it's called fiduciary. You're holding the money for someone else. You're the fiduciary. You are responsible for someone else. Here they have the pension trust fund. They have the custodial fund. You could also have under this category the private purpose trust fund, and the investment funds goes here as well. So this is their statement of fiduciary net position, aka balance sheet assets liabilities, and the difference between them is net position. Also, they would have kind of an income statement, in quote, statement of changes in fiduciary net position. Now, they don't have revenues. Fiduciary balances don't have revenues. They have additions, which is contribution, for example, for the pension from employees and employer. Then they would generate dividend and interest from the fund. They might have an increase or a decrease in the fair value of the asset. They might have sell some securities, make some profit, other income, which is 218, not much. Then they have deductions, personal services, people that work at the fund, at these funds, purchase of services, material and supplies, employee benefit, pension benefit, what they paid out. Usually that's the big one because we're talking about the pension fund. Refund of member contribution, administrative expenses, other operating expenses. Then they have the total deduction. Then we'll go basically income minus expenses equal to the change in net position, which is almost negative 600,000. The beginning balance was 8,098,525. The ending net position is $7,505,582. Again, they're not consolidated, full accrual, net position. And this is what you need to know overall. This is an overall, the big pictures. Again, these financial statements are found in the annual comprehensive financial report. Specifically, I'm using the Philadelphia, and I will be attaching the ACFR of Philadelphia within your lessons on Farhat lectures. So make sure you download the report and take a look at it as you are going over this. What else am I going to do? I'm going to go over the government-wide financial statements. I'm going to go over the MD&A of this ACFR. I'm going to go over the notes. I'm going to go over the required supplementary information. So you have to have a good understanding what goes under the annual comprehensive financial report. For now, I ask you to go to Farhat lectures, look at additional resources, multiple choice, true, false, additional lectures that's going to help you be prepared whether you are studying for your CPA exam or taking a governmental accounting course. Invest in yourself. Good luck. Study hard. And of course, stay safe.